Hi, I'm Peter Rose, founder of Longwood Currency Trading, and this is my third video that I've done today, May 21st in 2020. My stupid selfie stick here hasn't flipped the camera over yet, so hopefully we'll get through this video as well. What I'd like to talk to you about today is, or right now, is don't close trades based on profit. Close trades based on risk. And that's kind of the scenario that I'd like to chat with you about that. And I think I'm going to sit down for this in my chair here. And I want to show you that chair. We call this our snow depth chair because I hope you can see that. Let me get back away from it. Because when the snow gets up to the lower braces, it's 6 inches, and when it gets up to the seat, it's 17 inches, and when it gets up to the top of the chair, it's like cataclysmic. It's 36 inches of snow or something like that. Anyway, yeah, trading, closing your trades based on profit is generally what everybody thinks of doing. You have a profit target, and so when your price gets to that profit target, you think, well, that's why I'm going to close the trade then. And that's a big problem, to think that way. You have to change the way that you think about that, because profits take care of themselves. The only thing that you can contain or control is your risk. You have no control as to whether that price is ever going to make it to that profit target or not. So you can't get your little cranium fixed on taking a profit. What you have to do is you have to change the way that you think and take your profit based on the risk. What the hell does that mean? Okay, I went over this the other day in a video that I did, but let's say that you have a profit target that's 20 pips away, and your price is marching toward that profit target, and you're at 16 or 17 pips of profit. What is your mind thinking about? Well, it's only 3 more pips, and it's going to hit my profit. Really? You know, the fact that 90% of the traders lose 90% of their money in 90 days is indicative of the so-called best practices of trading that are being taught out there. Because if the trading and the education was valid, then you wouldn't have so many people failing. Now, look, there's probably more dumbasses failing in trading than there are that fail when they buy real estate as a percentage of the number of people that do it, because it's so easy to fail in trading, because you listen to these crazy dreams and you have all this leverage, and you can get in there with $1,000 or even $100, and you just think you're going to run that to $1 million, and there's nobody there to tell you that that's possible, but not with $1,000. But here's how you could make a couple of $100,000 starting with that amount. It might take you a while to do that, and you could say, well, geez, I could make a couple $100,000 in 10 years, starting with $1,000 of currency, or $10,000 of currency. I could do the same thing trading real estate. Well, yeah, but you're going to have to come up with $30,000 in order to do that, and there are far more risks involved. You know why there are more risks in real estate? Because you have to depend on your tenants paying you money. What's happening today during the COVID crisis? The tenants have all lost their jobs, or they're sick, so they can't pay their rent. What's the landlord doing? They've been prevented from foreclosing. So the landlord still has got to pay their bank, because the bank's not going to forgive the loan just because the landlord's tenants can't pay him. It doesn't work that way. Oh, what a mess this is going to be. In currency trading, we don't have to worry about that, right? When things are going bad for us, we get out. When things are going real good for us and we think that it's run its course, we get out. But we don't get out because it's achieved some imagined profit target that we've created. You know, we can look at structure within the price action on the chart, and we could say, gee, because of these congestion zones, because of the economic things that have been going on by the hedge funds and the institutional traders that are creating these structures, it appears that they have orders that they're trying to fulfill, and they're going to need to take this price up 20 or 30 pips. So why don't I ride that on up? But the fact that you identify that at that particular time in no way indicates what the guy who's the real dog in all this, the guy who's actually doing the trading, could all of a sudden say, hey, my order is fulfilled, I'm done. And that price will collapse away from that profit faster than you can flush a toilet. No kidding. And if you've traded it all before, then you've seen that, you've experienced it, you know what I'm talking about. Why don't you trade that way then? Because you're looking at the profit target instead of the risk. You think because your trade is in profit that you don't have any risk? You do have risk. The profit could turn and go against you, and you could lose a great percentage of that profit, or you could go into negative and have a loss. Just because the thing is moving well toward the profit target doesn't mean that it's going to keep moving there. And so you have to be on the alert for instances where that price is starting to stagger. Forget about the profit target. Forget it. It's either going to get there or it's not. And once you see that price start to chatter, once you see that price start to stop, once you see the velocity or the volatility or the momentum or whatever the hell you want to call it begin to change, it indicates that the person that's causing all that has changed their plan. You got to change your plan. And if your plan doesn't take into account price going down, it better, because you should get out right then. As soon as you sense that that plan has changed, then you need to exit the trade based on risk and not on the profit target. And look, if you're wrong, you get out of the trade, the thing goes down just a little bit and then bounces back up and starts going back up toward that. That could be the incentive to get back into that trade, and it could in fact mean that whoever the big dog in all this is, that's wagging us as retail traders, isn't done with his campaign. He needs to flush out a few more people. So, and if you don't know what I'm talking about, all this stuff, that's okay. We'll get to it at something. It's all based on the psychology and the economics of the big dogs that are running this thing. This $5 trillion a day market is not run by us, the retail traders. We're only 15% of that dollar volume. So we're not the dog in this, guys. So when you're trading, just change the way that you look at your trading. So in the last few videos, this is the second absolute ironclad best tip that I could give you. The first tip I gave you was take an immediate loss. When the trade is not going in your favor, when it's not working out, when it's not doing what you wanted it to do, get out. And for me as a scalper, I could get out before my 8 pip mental stop is at, but I have an 8 pip stop, and there are reasons for that, and I've gone over them a zillion times. You just watch the rest of my videos, you get that. But I have an 8 pip stop, so when it hits that 8 pips, I'm not wringing my hands hoping and praying that it's going to turn around. I'm out. That's the first tip to successful trading. And I just gave you the second most valuable tip is don't trade on profit. Trade on risk. Those are the two most valuable things I think I could ever tell somebody. Now, telling you that and actually showing you how to implement it are two very, very different things. But because I'm not talking here to beginners who don't know shit from Shinola about this stuff, I think you'll be able to take those two principles and try it. What have you got to lose? It's only money. And if you figure it out, that money will compound beyond your wildest estimation in the shortest possible time. Why do you think I switched my focus out of real estate and into this stuff? because I see the potential of it. Now, the fact that I fucked everything up and lost $50,000 when I first got into it was not based on me. It was based on listening to all these idiots out there that either don't know how to trade or they know how to trade. They may not know how to teach it, or they're trying to teach some rote beginner how to do it. And you can't do that. You can't teach this stuff to a beginner. Beginner's got to learn beginner stuff, and a more advanced trader has got to learn more advanced stuff. But before you can learn the advanced stuff, there's stuff that you need to learn in the middle there that you really need somebody to stand next to you and say, hey, this is how you do it. You got to get out of this. My name is Peter Rose, founder of Longwood Currency Trading. Have a great day and a great trading day. Thanks for watching the video, and catch you on the next one.